Okay, guys, how are you today? Yeah, cold enough. All right. Today we are starting net realizable value and the inventory write-down. Also, we are going to do all the turnovers today. Hopefully, okay. Inventory, accounts receivable, and payable turnover. However, it is the same thing that we have done in one week, right? For the inventory turnover, accounts receivable, and payable turnover, right? Apart from that, the new concept would be actually concepts NRV and the inventory item. And also, as I said, this is going to be the last part for the inventory, right? Which is carrying 20% of VC paper, right? So we'll do inventory write-down we haven't done before, but yeah, shouldn't be an issue. Straightforward, right? Yeah, let's first write the note, then finish our theory. Okay, guys, please read it. Right. So, just what is economic net realizable value? Anybody knows what net realizable value is? The net amount of a product or inventory at which it would be sold for. Right? Net amount. What does that mean? Are we talking about the net profit? Right? So net amount at which a product would be sold for. Right? Realizable means what? Is realizable. realizing. Yeah. English, I'm asking, not accounting. Realizing. Right. Realizing means in accounting, actually. Setting. What is possible, right? Setting. Right. So, there is a formula, as I have given you, estimated selling price, take away direct selling expenses, right? Estimated selling price, you don't have to worry because it will be given in the question, right? But direct selling expenses is the confusing. As a result, I have kind of simplified it for you, right? You know what I call for the don't write second in the exam. Net realizable value means basically net selling price, right? Not the net sales concept. That means total sales take away sales returns. That's the net sales. Not that one. Net selling price or net sales revenue, right? Then I have to put forward into an example. So let's say, right, we are having a shop that sells laptops, right? We are selling laptops, right? Let's say we have purchased the laptop for $1,000. Okay, we purchased the laptop for $1,000. So cost price, purchasing price, right? And imagine we are selling it for $1,500. Okay, we purchased it for 1,000 and then selling for 1,500. How much is the amount of percentage? 50%. 50%. Right. Then, let's say, right, our supply is saying, and the new version is on its way. Right? New version is coming. Right? Then what we do is, right, to get rid of our existing or the old version, right? We want to speed up the sales and we need to get rid of that, right? Because we need to make space for the new one, right? And also when there is a new edition is releasing, the demand for the existing one will drop, right? So then we might make further losses. So however, we want to get rid of that. To encourage the sales, right, to increase the sales, what we are doing, what we are promising our sales staff is, if you sold this one, we'll give you a $100 sales commission. Okay, $100, we give them a sales commission, right, to encourage the sales staff. And then to encourage customers, we are saying, look, we are giving you a free laptop. Okay. Even though it is free for the customers, do we get it for free? No, there is a cost for it. Let's say laptop buy cost us $200. Okay. Right. Now my question: if we sold, right, 1 unit, okay, and also we are actually dropping the selling price to 1,200. Earlier we were selling at 1,500. Now we are selling at 1,200. Now my question is, right? Now, what is going on in our shop, right? We are giving discounts. We are giving them deals, right? And we are offering sales commissions, and also we are dropping the selling price. As a result, what is happening to our sales? Right. Okay. Now, by selling a laptop, how much money do we make? Not the profit I'm asking. Forget about the cost price. How much net amount do we make? 900? Any other answers?
Selling price is 1,200.
Yeah. New one is 1,200.
Yeah.
How much are we paying the sales commission? 100.
100.
And then how much is the laptop bag?
Zero.
One. So how much is the money that you are making?
One.
It's correct. Right? Good listening. And good memory. Right. So then 900 we are is what we are getting. Does it make sense? Others? Right? So we sold it for 1200. Having sold it that one, I mean for 1200, we are paying the sales commission 100, and also we are giving a free gift for 200. So we are making only 900. Yes. Our can you tell me a concept for that one? What can we call that? Net realizable. Make sense? Net realizable. Okay. Now this makes sense. So that is what I meant by, remember what I explained you, the net amount that you would get by selling a product. Net realizable. Okay. Then what is the formula for that one, guys? Estimated selling price take rate, direct selling expenses. Now the other confusion is, when I was a student, direct selling expenses. How can I figure out the direct selling expenses? Now what are the direct selling expenses? Right? Direct selling expenses are the specific expenses that you would incur only if you sell the item. If you didn't sell it, no cost. No direct selling expense. No selling expense. If you sold a product, an item, if you sold a unit, then there will be an expense. If you didn't sell it, then no expense. Right? So that is what you call as direct selling expenses. Now these things are not in the textbook, okay? These ones, and I have put an asterisk, right? So I have simplified it for you, right? Now, for example, you have a question?
Yeah. So when you said advertising is not a direct selling expense here, but in the definition you said marketing.
Yeah. Again, that is not. So basically, the direct selling expenses related to sales, marketing, and distribution of inventory. Good question. But it is related to that particular scenario, not the marketing expenses or distribution expenses or sales expenses that we are making on day-to-day basis. For example, that's what I'm saying, is it? You read this book? Advertising. If you, like usually day-to-day business activities, what do? We do advertising, yes? So that advertising, is it included as a direct selling expense? No. Why? Because it is a spend regardless. It is incurred regardless.
What's the difference?
The difference is this one. So if let's say we run a special marketing campaign or advertising campaign just for this purpose, are they? Or is that one? That is direct selling expense. But the normal, the usual, our ordinary type of advertising is not a part of the direct.
What's the order?
Ordinary is like, regardless we are spending on advertising. But if we do specifically for this campaign, then that is direct selling expense.
If I have like a shoe business and I want to like put a YouTube ad here.
Yeah.
So that would be not a direct selling expense. And then what would be like
Yeah, so let's say like the example I said. Now let's say there is you are going to maybe get rid of your inventory, maybe like end of year or end of financial year or end of calendar year, season or something like that. Specific one. That's the one we are referring to. So as I said, if you spend advertising on day-to-day basis, no, that's not direct selling expense. Why? Regardless you are spending. Now think about, okay, if it is confusing, look at my example, right? So if you sold a laptop, then would you have to incur that expense? So let's say you are paying the staff, sales commission, and we are giving customer free gift, right? So imagine you didn't sell it, then you have incurred it. No.
So is that marketing?
Yeah, that's direct selling. That's a direct selling expense. Just specifically, exclusively related for the particular scenario.
But what if you're like marketing the product, yeah,
Yeah.
then you don't sell it?
Yes, that's correct. But this one, look at my example, it wouldn't happen.
This is only for sold.
Yes, if you sold it, yes. If you're selling it, yes. Usually that's the that is the only logic is that you can figure it out that it is direct. Otherwise, let's say even if you like for your question, even if you didn't sell it, let's say you couldn't, you run a special advertising program, but still you couldn't sell all of them. Some part at least, partially you'll be able to sell it,
Yeah.
but you wouldn't be able to sell everything. But still, that is what
Yes.
there is an expense.
What's an advertising campaign?
Come again?
What's an advertising campaign?
Advertising campaigns like you are running advertising, you are maybe advertising as you are advertising on the TV, YouTube, or newspaper.
Wait. Like a YouTube ad.
Yeah.
Like, wait.
Or Google ad.
Wait, when I asked you before, you said it's not.
No, I told you
Especially not.
specifically. Day-to-day advertising is not direct selling.
Okay.
If you are aiming a specific maybe product, activity,
Yeah.
then that is the direct selling. Yeah. Don't worry about I think you are overthinking, but what I said is, if you look at my example, that's what I said. If you also I take necessarily advertising, if you sold it at the laptop, that means you have incurred that additional cost.
Yeah.
Right? If you didn't sell it, no. Makes sense? Any other questions?
What's like an example of like a day-to-day advertising? But essentially, this is day-to-day advertising.
Yeah, so let's say you are advertising, you are running, what is it, normal advertising just to let the potential customers know, right? Like not a specific one like this,
So what is it?
business, yeah, or your brand, and that is all it is.
Do you even offer like buy one get one free? Does that mean the NLV of like both the
Yes.
companies is usually not?
That's a good one. Buy one get one, yes. But because you are at the end, you are basically getting only half, yes? Okay, guys. Now, any other questions by now? Right? Okay. Then my other question is, now, our net selling, how much is our net selling price? 900. Yes, everyone is okay with that? Do you want me to write it here? How much is the direct selling price? 1200. The estimated the new price. Direct selling expenses, so how much? 100 plus 200. As a result, NRV is 900. So this is the net selling price we are going to get. Right? Net selling price. Then, how much did we say purchase it for? Yeah, how much did I say the cost? 1000. Then what is happening? We purchase it for 1000, but we are by selling it, we are getting only 900. So what is happening there? We are
Make a loss.
making a loss of 100. Makes sense? Right? We purchased this laptop for 1000, but now by selling it, we are getting only 900. We are making straight away a loss, right? So then, that is what we call as, guys, the NRV has dropped below its cost, right? So we purchased a laptop for 1000, but now we are selling it for 900, right? We are getting only 900. We are straight away making directly we are making a loss of 100, right? On top of like we forget about the rent we are paying. We are paying for the staff, electricity. Forget about that. Directly we are selling this one, or we are calling this one, what is it? Gross loss. Gross loss, not the gross profit. Gross loss. Okay. Then there is a problem. The problem is that now how much have we recorded the inventory as? 1,000, right? In our probably if you have done a double entry, we have debited inventory 1,000, created bank account payable 1,000, right? So our inventory and also in the inventory card, it is appearing as 1,000. Now, do we have any moral right to say, look, our inventory is worth 1,000? We don't have any ethical or moral right to say it is worth 1,000. Why? By selling it also, we are making only 900. Then that means the NRV has dropped below its historical cost, right? Then in those cases, what do we have to do? We have to update that NRV. Whenever NRV has dropped below its cost, we have to update it in the books. So by how much it has dropped, which is $100 here, we call it, what is it? Inventory write down. Inventory write down. Okay, makes sense? Then let's say if you have 10 laptops, that means 10 times 1,000 is going to be our inventory write down, right? If you have 20 units, 20 times 100, 2,000 to be our inventory write down. What's the double entry for inventory write down? Which inventory write down is an expense. Because double entry expense is increasing, the expense increases, debit, and where do you credit? Inventory, because our inventory is low. That's it. Okay. Right. And also, what are the assumptions, guys, for relating to the lower of cost and NRV? Actual basis. Why? Expenses should be recorded when they are incurred. Yeah. In the period in which they were incurred in order to calculate the profit accurate. Good. By comparing the revenues and for that period. Okay. Then period assumption, same thing. Right. Then what are the characteristics, guys? Faithful and relevance. Right. Why is it faithful? NRV has dropped below its cost. We have to actually represent the real world economic events, right, as they occur, right, and also we can say that they are free from material errors, and then relevance. Of course, it is useful for decision making. Why? Because an expense has been incurred, so then we have to update the profit accordingly in order for the users to make the necessary decision making. Right. So I'll give you the note anyway for the characteristics, but assumptions, they are pretty straightforward, guys. Right. Okay, guys, what are the reasons for NRV dropping below its cost? Or same thing, reasons for inventory write-down? Selling expenses.
Like specific selling expenses.
Specific selling expenses, yes. What else? Yeah. So why do we have to necessarily? Yes. Why do we? Yeah, correct. Why do we have to necessarily drop the selling price? Oh yeah. Why do you have to incur? Sell faster. Yes. Yes. Lowering demand, and then what else? So what do you call that when this new edition, like new editions are superseding the existing ones? Yes, technological obsolescence. Yes, technological. Yeah, and then uh, sometimes purposefully reducing the selling price as a marketing ploy. Yeah, right. And sometimes, like last time, inventory being damaged. Remember somebody dropped the TV. Yeah, like that. And we have to, purposefully we have to. Yeah, so sometimes inventory being damaged. Yeah, let's write it. Yeah, purposeful. Yeah. Sometimes Sanya like to because of the uh, uh, higher competition, right? What do the businesses do? They will sell lower than its cost, right? To gain the basically market, right? Market share. So to gain the market, meaning the customers, they will purposefully sell it below its cost, right? Yeah. Where do we report this inventory write down, guys? In the income statement? No. After the inventory loss. Okay. Yes, to calculate the adjusted after the gross profit. To calculate the adjusted gross profit. I have another question. Do you have any questions? No. I'm going to ask you a question. Yes, thanks. Discount. Yeah, discount expenses not relating to inventory. It's relating to the accounts receivable. So, and also it is discount expense is incurred when cash is settled within the discount terms, right? So for early payment, we are offering the discounts, but this one is for inventory. So we can't record it as discount because not relating to accounts receivable. As a result, we have a separate ledger account, right? Okay, guys. My question is, right? Can we have inventory write down and inventory loss together?
Yes.
Yes, sure, very confident. Why? Why? Oh,
You can lose inventory, then have inventory.
yeah, okay. What is? Can we have inventory gain and write down?
Yeah.
Okay. Yes. Oh,
You gain more inventory.
you gain more inventory and
Okay. Yeah. No, but you hide that. That doesn't make sense. No, but gain inventory is like physical inventory is something. That's different.
can we have gain and less loss? Oh,
Because the inventory gain is just the physical count being higher than the expected.
higher than the recorded
Yeah,
inventory.
while the
Inventory write down.
write down it's just when you reduce like the cost of the inventory.
Yeah. Oh, yeah. You guys are correct. I was trying to trick you, but you get it. Not trick. Yes. All right. Yes. We can have. Yeah. What he said is absolutely correct. Inventory loss or gain is based on the quantity, guys. Yeah. So when you count the physical tape, so the quantity based on the quantity. So we are saying like we have 11, so inventory gain. Or we have 9, inventory loss. So that's based on the quantity. Whereas this one is on the what? Value, price. Right? This one is on the value. So that we can have both inventory write down along with inventory loss and inventory gain. But we can't have inventory loss and gain at the same time. Right? And then guys, which one do we record first? Let's say we have inventory write down and inventory loss. Which one do we record first in the inventory card? Inventory card I'm going to show you. Right? Write down first. Write down first.
Would you record the write down on the same day as the transaction?
Yes. You'll have record on the same day. Why?
Yeah.
Because all of them are. Yeah. Because all of them are. Sorry? No. What are we doing? What are these things we call?
Transactions.
There are transactions on the balance adjustment. We are doing the balance adjustments, right? So balance adjustments are done on the last day of the period. Okay, so then all of them are done on the last day.
Wait, they're all done the last day of the period.
I mean, not all transactions. These ones what we are doing. Right?
Both.
Inventory loss, write down, gain, right? And so on. I gave you this list of the balance adjustments. Right. However, guys, right? Which one do we record first? If you have both of them, inventory write down and inventory loss. Which one do we record first?
Okay.
Gain or the loss first, right? Sorry?
Right.
Yeah, in the income statement or in the inventory card. Technically, actually, in the inventory card first. Then after that, we will record does it matter?
No,
Yeah.
right down this.
Write down first.
Yeah, that's
Yeah. Why? Write down second. Yeah. Write down first. Oh,
Because like you can change the price here and like you can realize if something goes again.
okay. Why do say write down second? Yes.
It's like you can have an inventory gain. And
Yeah.
usually it's
No, I'm sorry. Yeah, inventory gain. Yeah, but inventory loss. If it goes inventory loss.
still like you should like you have like gains and losses set. Yeah.
So basically, we have record as inventory loss first. Yes, he said it's correct. Why? Or even if it is again, yeah, you record it first. Why? Because there is no point in, right? Writing down an inventory that is already lost. If the inventory is lost, what's the point in writing it down? No point, yes. So then firstly we record the inventory loss or the gain, then we will write it. According to my memory, there is only one question that has come so far in VC. Right? Inventory loss and gain. Sorry, inventory loss and write down together. But that also, then you don't have to worry, you didn't have to worry. Because they had given the memos, so you are basically following the memo number. So it's easy. But in case they didn't give it to you, memo or something, then I have to think how you guys would record. Then you have recorded inventory, loss of gain first. Because why? As I said, no point in writing down an inventory that you have already lost. Okay. In that basic question a long time ago, I think about 10 years ago or something, I can't even remember. The question that also the inventory loss of gain is what they have recorded first, then the write down second. Sorry. Then, yeah, occurs together with
Wait, does the whole inventory line get affected? Whether right now?
yes. I mean, if all of those inventory that we are writing down, yes. But otherwise, let's say if it is couple of them that was damaged or something, then only those ones will be affected. And also, if we are running FIFO, which ones are we going to write down? First ones, right? First FIFO. Still we apply FIFO.
But can you have gross loss?
Yeah. Possible. In this world, Today you might see, a boy or a girl. The next time when you see, like, the gender has changed. So if that is possible, how would this wouldn't be possible? Yes. Yeah. Sorry. Yeah. Yeah, you can have gross loss. But gross loss is actually not practicable. It is possible, but not practicable. That's why, because gross loss means, selling price is lower than your cost price. If they are like so down, I mean, not necessarily down, because I see earlier we discussed what is it. They use marketing ploys to eliminate their competitors. Then they can, it is possible. Everyone done writing? Okay, guys, have a look. Now, no. I'll show it rather than textbook. Okay, guys, now let's say, now in my example, assume we had that laptop thing, no? Assume this is the inventory card for laptop. Right. So our cost, let's say we had how many? 20 items, 20 units. Cost price was 1,000, balance 20,000. What is the date? Let's say January 31st. Right. Then on this date or balance, right? Okay, so then they do it on the, what is it? They are doing the inventory write down on the 31st, supported by a memo, right? Then let's say we are dropping it to how much? According to my example, 900, yes? So this one becomes 900. Cost becomes 900. To get this 1,000 to 900, we have to drop it by how much? 100. So then you are recording in the out column under the cost. So then quantity 20. So then as a result, total will be 2,000. Right? So then our new balance will be how much? Sorry? 20? Yes, 18,000. Yeah. Cost is 900. Quantity? Sorry? 20. So then this one doesn't mean, guys, right? This inventory line is going out. It's not the quantity that is going out, that's the value going out. Because we don't have any other method to record it, this is how we record. So we had a balance, we had write down the inventory, then we do it. Okay. Then from this one we can do basically anything, right? And let's say if you want to calculate, do a inventory loss or write down, gain, still we can do it. Right? But we have to do the inventory loss or the gain first.
If you're only taking like 100 off, like half the inventory, like 10 of that,
Yes.
100.
Yes.
And the remaining 10 would be.
Yes, very good. That's a good question. Then let's say we are going to do only, right? How many? 10. Or maybe let's say we'll take only 5. So only 5 maybe 5 laptops they have dropped. Right? Then we are dropping it by how much? 100. So 500. Then what will be the cost?
So father, 15,000.
5 at yes?
No.
900.
Is that the first?
12,000.
Then
15.
And then 15,000.
15 and 15,000.
No, 1,000, 30,000.
What did you do? Are the 6 going to be the 5-4? Why? We are by 5-4. We apply 5-4. Imagine this is 5-4, right? So we are applying 5-4. Why? What we have basically we have written down the inventories, the inventory that we had purchased first.
Oh.
Would it matter if you swap the order, like you put 15 on the top?
No, it actually matters under 5-4
Is right down the oldest.
because we think that the whatever the inventory that we have received first is what we are writing down.
Okay.
Even if you are doing it in the identified cost, still we are following the same thing. Yes, when we record the balance, yeah, or the prices, what do? Still we follow the same orders, the order in which we received the inventory. Make sense? The cost prices, yes, even on the identified cost, it's the same thing that we do.
What if write down? What if you said write down specific inventory? That wouldn't make sense.
So like that, if you want, we can do any number of questions. Imagining, right? I imagine we had like 2 different units. Still, we can do the same. Okay, like what? Let's say we had we had 10 at 1,000 and we had another 10 at 1,100. Right? Then all of them what are we going to do? We are writing down. Then what will happen? Then we'll have a memo. We are doing 10 at 100. The other 10 at no, one. The other 10 at we are dropping everything to 900 to 1. Then what will happen? All of them will become yeah.
What if that identified cost says like you write down?
Yeah, then you can separate. So we can do any method, anything, any combination. Right? Okay, guys. Basically, that's it for.
Say, but example.
Yeah.
Say, let's say the 1,100 inventory you have here was worth 900, and then you do inventory write down for the first inventory line, and then they both value at 900.
Yep.
Can you still put
Yeah,
it together?
yeah, together, yeah. You can, yep. Because now regardless, they are the same price. No pointing, what you can do is, alternatively we can do 10 at 1,000, the other 10 at also, 10 at 900, the other 10 also 900. Same. But if we had something in between, then different story, then we can't add them together. Okay, so we have done that before. Okay, guys, shall we do a question? Yep. Read the question, please. You can do part A.
The question is this 15% commission, is that 15% commission on 500 or 800?
What do you think?
I think it's 500.
Yeah. Because 800 is now irrelevant. Okay. Can you do part A, guys? Yes. NRV is the estimated selling price.
Of any inventory.
Yep. Selling price of inventory
As
plus any
represent
on sales, marketing or distribution. Yeah. For part B, calculate the NRV. Yeah. Try it. Write the formula. NRV equals NRV equals extra cost of you come?
yeah.
Yeah, tomorrow guys, we said 8 AM, yes?
For cost.
Yeah.
Yeah.
8 AM, yeah.
In NRV, you don't include the reduction in the federal cost as part of the annual.
As part of the NRV.
Okay, so like the reduction of its selling price isn't included as a direct cost, right? Direct expense.
None of the reduction, just the expenses included to calculate the NRV.
So the only expense is just the commission because that's.
In this case, yes.
So the minimum being 425.
Yeah.
course, wait, good to see 24, but you also never 24. The question, so we're sharing our children online. You don't fail.
No, I didn't need to.
Yeah, the question says, the owner decided to reduce the price of.
Yeah,
Oh, that's what I'm saying.
you're asking the source document?
Yeah, I should try it. What's generation? Systems. Systems.
Good job.
Yeah. So. Okay. Then you get. Yeah, this is what I asked this one. Okay. He voiced like 77. Yes, still not 50. Okay. It's not going to be the case of all something wrong. That's when you're doing it, you should call back. It's awesome. We only do it from members 24, the other the previous transaction and then
What do you think?
it says it looks like.
Yeah, but they have given the balance. So then if you are going to do only the memo part, then how much are you going to write down? How many units are you going to write down? So then what about this 14? Only 8. Then what would you do? Do you have to do the sales transaction?
Oh, yeah. Maybe it's just a record.
Yeah, but you are meant to record this, so they have to see 3 lines. You are meant to record the sales as well. Like if you are going to do that, then what will happen? So then see, 14 has become all of a sudden 8.
But weren't you over to say that those are increased in the selling price?
Including the selling price?
Well, no. Yeah, no, the selling, so that the 450 is what
Yes.
it actually costs.
Yes.
And then you have to sell it.
No, it's not sold at 800. It's sold at 500.
There's.
So 800 becomes 500. Yes. 800 was the initial selling price, the old selling price. Yeah, 800 is the old one, yes, isn't it? See, 6 cameras were sold for 800 on 21st. That was sold for 800. But are we recording the 800 in the inventory card? No. So then for the inventory card, the selling price doesn't really matter. If you did the income statement, yes. But for the selling, for the inventory card, doesn't really matter. Right? So at which price are we selling? This one, 21st? September 21st, yes. What is it, guys? The receipt 24, yes. Receipt 24, right. How many units are we selling? No, 21st we have record before the memo. That's what I'm saying. Right? 21st, how many items are we selling? 6, right? 6. Then, at which price though? 450, yes. Yeah, 450, yes. 2700. Then 8 at 450. 3600. Right? Then what do we do? Then we are coming to the end of the period. To encourage, sorry. on 30th September, the owner decided to lower the selling price of the remaining cameras 500 plus GST each, encourage sales, offering sales staff 15% commission. So then this 15% we are calculating on which price guys? 800 or 500? 500, right? Because 800 now is not relevant for decision making, right? Okay, so then 30th memo, what's the memo? 24. Right, memo 24, how many units? 8 at, no, no, 8 at 25, 200. Then 8 at, what is it? 425. Is it clear, guys, or is it confusing? Hands up those who got it correct? Yes, 2. Very good. What's the double entry, guys? September 20th. Yes, what's the double entry? Chanara, can you tell us the double entry? No? Why no? That's what we did. Inventory write down is n, what is it? Inventory write down is n? What did I say? Inventory write down? Yeah, asset, liability, owner's equity, revenue or expense. Expenses. Now expense is what is happening? Increasing. So expense increases, what do you do? Debit or credit? Debit, yes. So inventory write down. $200. Value credit. Oh, sorry. Value credit channel. Yes. Yeah, why? What is happening to inventory? Inventory is an? Yeah. Asset, liability, owner's equity. What? Asset. Inventory is an asset. Asset decreases. Credit. Right? Okay. So are we writing the narration, guys? Yes. What's the narration you wrote? Yeah. Inventory being written down.
8 counts.
Yep. Come again?
You have to say the price that we're written down to.
No, true. Inventory, if you want, you can say, but not necessarily. Inventory being written down. As NRV dropped below cost. Memo 20. 24, yes.
Go through this part again.
Which part?
Yeah.
This one, the inventory card? Yeah. Okay. Did you read the question, guys?
You have to write the NRV below cost.
You don't have to. I just wrote.
Just write inventory line. Write down the canvas.
Inventory. Okay. What I'm saying is, recommending if you have space, write it, because there was, I had 2 lines, so that's why I wrote inventory, and now we drop below its cost. Yeah. Now, Kunara, you read the question, yes? What is the story? Now on the as of 1st of September, we had 14 items at 450 each, right? Okay, we had 14 items at 450 each. Right? Then what happens is on the September 21st, we are selling. How many? Under the receipt 24, how many? 6, yes. What's the cost price? 450, still 450, yes, nothing has happened. 2700, 8 at 450, 3600. Right? Then only this inventory write down, the NRV story happens. Why? On 30th, now see. On 30th, what happens? The owner decided to lower the selling price. It didn't happen before 30. Only on 30, on the last day of the period, only it happens. The owner decided to drop the selling price of the remaining cameras to 500 plus GST. Then after that, to encourage the sales, he's offering staff sales commission of 15%. Right? Then what do we do? Then our new selling price is 500. Right? Now our cost price is going to be, what is it? Our new cost price or not cost price, sorry, NRV. In this case, right, 500 take away 500 times 15%. So 500 times 85% will be 425. Minus that, yeah. Otherwise, if you want, you can quickly calculate. But better to do the workings. Right? 500 take away 15% on 500 for 425. Right. Then 450 becomes 425. Then what is happening? Now 425 is the NRV. Now NRV, do you think now NRV is 425, cost is 450? That means NRV has dropped below its cost, meaning we have to write down the inventory. Yeah, clear? Right. Then what is the double entry? Before the double entry, how do we record it in the inventory card? September 30th, memo 24. So our cost is dropping by $25. Then we have 8 units, 200.
Yeah.
Right? Then 8 at 425 each, 3400. Yep. Any questions? Questions? Right. Did you do the income statement, guys? Punar, are you okay?
Yeah.
Any more questions? Right. Revenue, how much is our sales? 800? Sorry? 4,800? What is that? 8 times? So no, 6, yes. 6 times 800? 4,800. Then we have cost of goods sold, which is cost of sales. Cost of sales is going to be 6 times 450, which is 2,700. Gross profit is 2,100. Right, then we take away, what is it? Inventory. Write down 200. Adjusted 1,900.
Any place you could actually record the NRV?
NRV?
Yeah.
NRV we don't record. NRV is used to calculate the new value of the inventory. It doesn't get recorded now.
Yeah.
Because you know the reason. NRV anyway, we can discuss. NRV, we don't have any supporting document. Because no support, source document, because we are based it on the estimated selling price. Okay, guys. You want to try question 2?
This question.
Good.
Wait, A and B is the same. I don't think you
For the first one, I don't think you apply the direct selling.
should.
Did you read the question?
You should.
Huh?
You should, but it's saying.
Hold on. Did you read the question?
We write it down. Yeah, like. We write down, because like let's say if B wasn't a question.
If B wasn't a question,
Yeah.
if B wasn't there,
A was there.
mm,
And we went like the example condition, and like we also like.
no. Read the question, part A. You are confused with part A, not part B.
Part A, we would do like 200 times 50 and times 30, but part B, 100 times. Okay. Is that just what we? Okay. Because you have to write it down. If. I know we did it on this.
Okay, then you read the part A.
Yeah.
What do you understand? Do you have to apply the NRV? No, it doesn't say. Yes, now, what do you think? Do you have to apply the NRV? Varun? You have to apply. Okay, part B then read.
Find the lower plus on. Now you are.
Yeah.
But like in an inventory, like, that's not saying like there's a tree and all the trees, all the apples in the tree are red. And the first question is like count the amount of apples, and the second question is like count the amount of red apples.
Yeah, actually, first one, you don't apply the NRV. That's why it says specifically, yes, yeah, applying the NRV. Yeah, so according to your example, count the red apple, part B. Any question? Yes, Manara? Yeah, confused with what? So, for part A, okay. Still, some people are confused. Okay, part A, guys, you don't apply the NRV. You just do assuming that you didn't have a concept NRV, just put it as it is, right, based on the memo 70, right? And then for part B, then you apply that. Because like some people have their understanding that part A and B same answers, it doesn't make sense. Yes, why would the examiner is asking in two parts, same answer? Doesn't make sense. Yes. So first part, you don't have to apply them now. You just do it as it is in the inventory card. Why inventory card doesn't have that? What it means is, guys, let's tell it. Inventory card doesn't have the estimated and fixed expense. That's what it means. Basically, for part A, you don't have this one. You will have quantity and unit price. That's it. For part A. Right? Part B is where you will apply the estimated selling price and direct selling expenses. Make sense? Poonam?
Yeah.
Yeah. What's that? Taking a time code. Done, Harry?
Wait, like in an exam, like if there's no party
Yeah.
and we got asked by it,
Yeah.
like should we just do that in our meeting?
Yeah, no, because why? As I said, this last two columns wouldn't be available in the inventory card. Would you see the selling price, estimated selling price and direct selling expense?
What about race up stuff?
Huh?
Sounds like there's a Formula One race up stuff.
Aren't they illegal? Those that like very noisy.
Yeah.
What?
Yeah, it's against environmental protection.
I think it's illegal. I think I don't know exactly. It's like
Modified,
basically,
if it's not from factory, it's illegal.
yeah, because like it's very distracting. Yes, like
No, it's illegal for environmental, that's what it's saying.
I mean, environmental, not for the society.
No, it's illegal for environmental.
I think it's for the society.
It should be illegal, but I work with the guys that say, and it's for environmental.
Yeah, is this like really from the
Yes.
But still has to be.
This one is
Yeah.
one thing that's like it is being
Okay, so, yeah, can you, yeah,
This is what significant times.
yeah,
So if they run it down by this much,
Mm.
we'll take that,
yeah,
that.
right, minus, yeah, right,
So you just think 5 minus 5.
for all of them,
No, just for this.
okay,
Figure out what and I'll be for
yeah,
you get another setting, right?
yeah,
So setting is quite small.
yeah,
Check if my check out.
I can go through it.
no,
This one we are recording, not over the notes, because all the
oh, right,
inventories we can't record in one place. Yep.
okay, and then when you lower cost. And price should be like lower cost and
I think lower, that's just like.
Oh, is it just lower?
Maybe you can't record the long one.
Yeah, well,
If you subtract it, and it's
lower.
lower.
Yeah, you are recording only the one that is writing down. Not all of them.
Find it.
Aren't they all-
Find it.
No, they are different in internet. You can't record them in one.
Yeah, 17, that's too high.
Oh, those are the one that can reduce to the lower the class.
I think, no, just.
You leave it.
It's multiplied
You multiply it.
to figure out, right, totally,
Oh, so just be
So you add the more.
Oh, okay.
Yeah.
Wait, wait, I crossed out everything.
Yep.
Okay.
So there'll only be one inventory.
Sure.
It's I was.
Okay, now, I think some people have issues, yes, in calculating the NRV. You know what I would do? Look at this. Right? I will have another column for NRV. Yeah? Punara. Yeah, see? I would have another column for NRV. Then how do you get the NRV? The difference between these two. Estimated takeaway direction. That's it. Yeah, so if you are going to calculate the NRV guys for the jeans, how much? 70, shirts 32, and hats 25. Right? Those are the NRVs. Yeah. Everyone is done with part A. Any questions with part A? No? Yeah, what's the value you are getting? So what I would do is jeans 200 times by 50, yes. 10,000. Shirts 50 times 35, yes. 1,750. And then hats 400 times by 20, 8,000. So I'm getting 19,750. Okay. Then did you do part B? Lower of cost and NRV. Okay, now we calculated the NRV. Which inventory items NRV has dropped below its cost? Shirts, yes, right? So jeans NRV is 70, cost price is 50. No problem. Cost is still lower. Hats, cost price is 20, NRV is 25. Still cost is lower, no problem. Shirts, cost price is 35, NRV is 32. Then NRV has dropped below its cost. Then we are going to update. So then guys, the only thing that I'm going to be interesting is I'm going to change the shirts, right? So jeans, same thing, 10,000. Shirts, 50 times 32, which is 1,600. Yep. Hats, same thing, 8,000. So I'm getting 19,600. Okay. Okay, part C, state 3 reasons why the NRV of the inventory might have fallen below its cost. How many reasons did I give you? 4, yes. Yeah, so you have to pick only 3 of them. You can write that, yes. Any three you can write.
But you don't points allowed.
Yeah, yeah. Of course, see, they are saying state three reasons. State. So dot points are allowed. Yeah. I mean, if you look at the study design, I'm sorry, exam report, that's how it will be said. So otherwise, how would you write it? Like you are writing like a paragraph? Really? No. I don't think. I mean, I don't think it is needed. Yes, it makes sense because even for the
It was say more than a fundamental journey.
yeah, you don't have to no. Because even for the examiner, the examiner who is reading it also find it easy. Like when it is set out like one by one, I don't understand. Like yeah, it's who is your teacher, Mrs. Engler? Yeah. She's like maturity. Mature people are sometimes they are weird. They think like different. No. Definitely no. If you want, Kunal, you can check the exam reports. So many, things will be there in dot points. This Pranav in business management, we wrote it. Yes, dot points. Huh?
You're allowed to do it.
Yeah. Why? Why you state to identify? I mean, they are the reality though. But
I think that was one question section. Yes, no, it's not good.
yes.
I put it after you can actually but it's the most
Yeah, your teacher also doesn't allow.
Don't do it like explains, bro. Not explain.
No, state. Otherwise, how do you state it? Like,
Don't put the dot point and just write your point and then.
okay. That's fine. Yeah, dot points in the sense like you don't have to put like signs or anything. You can just write one by one. That's what I mean, like dot point.
Just easy.
I don't think this one.
Yeah, don't do any artwork, I mean, right? You just write it, yes, one by one after the other. So, I mean, if I wanted to write, I would say, yeah, inventory being damaged. Yep, then decrease in demand. Like this. Yep. Yeah, that's it. And one more. Okay, guys, part D. Referring to your answer, part B explain why it would be unethical to continue to value all inventory at its cost. Yeah, now this is an ethical question, guys. Yeah. Ethical question. What is the ethical part here? Faithful representation. Yes, only faithful. Relevance, only relevance. No. What else? Huh?
Values over.
Values over?
Over.
Come again, old?
Yes, over value.
Overvalue. Yeah. So basically, again, you can say accrual basis, period assumption, anything you can bring up. Right? Then basically, my question was why would it become unethical, or ethical question? Because we are basically, if we didn't value them at the NRV, we are breaching the theory, conceptual framework. Yes. Right?
Yeah. We just can't answer it. That was going. Look at I would send this off you this
Let's say like yes, like
Become capital, become capital. And it is launch. What's that? Oh, I didn't know. They don't do it. Oh, there's the skins. There was. The still see. Like my parents have built plus in the box. So it would like some kind of.
I started with us.
In camp.
So, party guys, start with the balance, okay?
Staying along with the other people. I remember to see Muslim company.
What was the balance, guys? What is the quantity? 58? 35. 35 balance. Then you can record the memo. Then do the memo.
The balance also on December 31st.
Come again?
The balance
Also, yeah. Because we haven't been given any other information.
Which is the balance?
Balance, it was given in the question, Kunal. See, creative fashions. Physical inventory count.
Yeah. The question number 17, so it's-
Oh, sorry. Hold on.
Then 235.
Yeah, memo 17 is the one that it is telling us these values. Done? Yes, you guys done? Part 3, part F. You are talking more than you are working, yes?
No, it's about the.
Huh? About work? Yeah, but still you are talking too much. Okay, guys, party done. So what will happen? Memo 17 on the December 31st. What is the quantity, guys? 50. Puna, what's the cost here? 32, right? Which is 16. Are you sure this is 32? Yep. Or 3. 53, yes. 150. Yeah. No.
Yeah, sure. Just,
8.
yeah, sure. Yeah. Yeah, 50.
No, 32.
40 minus 8. Very good.
40 minus is 32, yes, but we are dropping from 35.
Oh.
Yep.
Oh, yes.
Yes, guys. So we had 35, we had valued at 35, this one, but now it becomes 32. That means we are dropping it by $3, yes? 3 at 50. 150, then done. Then the other one is, guys, what's the double entry for this?
Inventory right now gets debited 150 and inventory gets credited 100.
Yeah. Okay, part G. Part G, guys. Overstated inventory. So assets will be overstated. How would it be overstated? Yeah. State the effect on the counting equation if the inventory is not written down. So if we didn't write it down means, by how much would we write it down, guys? 150. So if we didn't decrease it means it will overstate which item? inventory. Yes, you have to specify that one. Assume like two assets were there, then you have to identify both, and you have to say what happens there. Inventory overstates. Let's say the other one is, let's say for example, bank also overstate to understate with the respective amount. Okay, the same, right? Inventory. But if it is only one item, you don't have to worry. Why? Because it is understood. It's the inventory that is overstated, right? Right. Liabilities. No effect. Right. Owner's equity. Understated. So then, 150 years. Then, it's overstated. Yes. Yeah. Owner's equity is, what is it? This guys. Overstated. Then you have to say inventory write down. This one you have to write in details, okay? Within brackets. Inventory write down would be understated. That overstates what? Overstates the expression? What? No. Inventory write down expense is understated. That overstates what? And so asset is coming under owner's equity. Yes, Harry? And now?
Right now, will be say, which understates the other.
So that's what you're talking about, yes? You said that you were having a discussion on the work. Is that what you're talking? I'll ask question. What is it? Overstates the net profit. What is this, guys? Yeah, you are out. I think you guys are talking something not about work outside the work, yes? Your mind is out. Okay, 150. Right. Any questions?
It's outside exact after.
Wait, so small loss of theory?
No.
It's like income statement.
Still we have to income statement. Yeah, income statement and the cash flow statement. We'll do it together. Yes, we have cash flow statement, but and also we have something called doubtful debts.
We need to do that.
No, not for unit 3. But that depends, how your school is going to do it.
Do you understand?
Come again?
Could you have a break?
Yeah, after 7:30. Yeah, do you need a break?
Yeah.
And angry?
I'm hungry.
And angry?
Awesome.
And angry?
Use some words. You want one? Want some? No, we can have it.
If you want to, you can start question 3.
You have to look for like tomorrow.
Yes, I will do. I'll give you. Not now. I haven't printed it because still it's with my the typesetting there. So actually I'm printing it tonight. Yeah.
I thought you
You are already coming to doctor's classes.
Yeah.
That I will have to ask him to get you in add you, because if you are already enrolled, I can't do. Yeah, I had to ask him.
Yeah, tutorial 4.
Did you text me?
Oh,
Tutorials. Nope. Yeah, please text me, Kunal.
I texted both of chat.
Sorry?
I texted you both of chat.
Ah, 4, yeah. Only 4?
Yeah.
Ah, then you also asked me some tips, yes? Ah, yeah, text me. Yeah, text me. When you see me, you remember, yeah?
Yes. Even off.
Thank you very much. Okay, guys. Okay, guys. Right, part A. Right, referring to one assumption, explain why it would be incorrect to value the jackets at 250 each. Why is it 250 each is incorrect? What will be the assumption? Accrual basis? Any others?
Oh, going. Right. Selling people for, I mean, yeah, I mean,
Yes, anybody else? Accrual basis? Accrual? JD? All of you? No, sir, it's accrual basis. Then Sana? Accrual basis? Yeah, accrual basis. Yeah, why do you say accrual basis?
Inventory write down.
Hmm.
It's expense, so expenses.
Inventory write down? No. That means you haven't read the question.
It's difficult.
Yeah, all of you are wrong. No, it's not accrual basis. Why? Now, what's the problem? Explain why it would be incorrect to value the jacket at 250. Why? What is 250? Selling price. Why would you value it at selling price? Only if you are going to liquidate your business. Then only you are going to value them at your selling price.
It's only liquidate your business when it's really about to end your exact closure.
Yeah, we can do that one. When if you are going to yeah, if you are going to liquidate it, you are going to sell your business, then you can value at selling price. However, still, yeah.
Which allows you to write as selling price and cost price to liquidating business.
Yeah, that's because the business doesn't have an intention to go forward. So then we can value it at selling price. Okay, guys. Yes. Why is that?
The inventory value is cost price.
The cost price. Why? Because unless the business is going to be liquidated, there is no reason why the inventory should be valued at its selling prices. So it is only at the cost price, right? If it was yes,
But even at 60 goes parameter.
even at
Even at the estimated selling price.
no.
Like what we did.
Yeah, estimated selling price is a different issue. That is only again NRV is applied. If the NRV has dropped it below its cost, then fine. But this one is asking the original selling price. No way. But even like if you calculate the NRV with the 250, still what will happen? NRV is higher than its cost. That means we don't have to value it at the
It's below its cost.
sorry,
The NRV is below its cost.
below its cost only when it is when the selling price is 80, not 250.
Oh, yeah.
Okay, so that's why you have to read the question very carefully. Yeah, you guys don't read the question, I think. You guys read books? You read books? That's the thing, you have to read books. Right? Then only you can improve your reading speed, and also you will be able to grasp what is in the text. Okay, you guys are what is it? Watching, yes? You guys are watching, yes? No, watching doesn't, because like unfortunately the accounting paper and also other papers wouldn't be for watching, for reading. Okay. Right, then shall I give you the answer?
Lost my job. I don't know.
It was if it was a characteristic, what would you write? Yeah, verifiability. Correct. And also faithful representation. Why selling price is subject to, yes. Yeah, it's not free from material errors or biases. Selling price will be biased. Okay, guys, part B. Referring to one characteristic, explain why the jacket should not longer be valued at the cost price. Faithful representation, very good. Also, if you want, you can say relevance as well, but faithful is also correct, right? So then, why is that guys faithful?
It's falling below the original cost price.
Yep. So, what should yes, the real world economic event. Sorry. Yes, accurate. Yep. Material errors. Yes. Yep.
We studied that is you studied that is 70 this is the content.
Okay, part C, guys. Did you understand? Everybody understood the question? No. What does it say? The normal selling price is 250. Owen estimates each jacket will now sell for $80. This will require extra selling expenses costing $1,400. Now my question to you guys. Yeah. Now what is this one? This is advertising, yes? Selling expenses. Or not advertising necessarily, selling expenses. What is it?
So
Yeah, so is it going to affect the NRV? Yes. What is that? Is it day-to-day business expense or specific? Extra. Sorry? Yes. Retract the wording. Yeah? Okay. Now, guys, what is the story? Now, what is happening is our estimated, we can calculate here is, we have space. NRV, yes, NRV is estimated selling price takeaway direct selling expenses. How much is the estimated selling price? 80. Takeaway direct selling expenses 20 each. How? 1400 divided by 70. How did we get 70, guys?
70.
Yeah, 70 units. See? 70 here. 50 plus 20, okay? 70. That means how much is our NRV, guys, now? 60. Okay? 60 is NRV. Right. Then the story, right? 60 is the NRV, right? But we have two costs. Yes? That's where some students had got confused. Our NRV is 60. NRV take away the cost price is, sorry, the other way. Cost take away the NRV is the, what is it? Inventory write down. Write down is this. How much is cost? We have two costs. One is at how much? 70. One is 70. Take away 60 is 10. The other one is 72. Then as a result, 12. So we have two lots. Okay? Then we'll record it, guys. So we have, what is it? What's the balance? 50 at 70. 3,500. 20 at 72. 1440. Then what is happening? October 31st, is it a memo? 73. Memo 73. Quantity is how much? 50 at 10. Yeah, which is 500. This one is 50 at 60. 3,000. No, hold on. Yeah, we are going to combine. Hold on. Then next one is 20 at 12. 240. Yes. That is going to be again 20 at 60. Now, because this is the same cost price, we can combine this, right? We can combine. We are going to combine them together. Then we have 70 at 60, 4,200. You have to leave this line space. No, but that's the norm. It's the practice. Okay.
So what happens if you have a bigger space, like for app column, you can write two of the transactions in one. Like they usually make it bigger. So.
Ah, yes. Then you can, yes, you are correct. If it was just, what is it? Kunal, if it was just one line, yes, then you can record all, yeah, both the things in one box. I know what you mean. Like sometimes that's how they give in the VCA, the answer booklet. So they don't have, okay, I'll show you. I'll get a different color.
I was thinking this is lazy. Yes, I don't want to do it again. Obviously, actually, this is actually yeah,
Pranav. So what it means is, what she's saying is this one box. I mean, this one will be given as one row. So then what I'm saying is we can record it both of them together. The two lines we can merge. You know what I mean? Yeah, that's what she's saying. Now these two rows can be merged. So then you'll have more space to write two lines.
Oh, like in that one box.
Yeah.
Right.
In one row.
Wait, like what did he say was?
No, like those two rows can be combined, merged together.
What's the word?
Yeah, can you please explain it to me? Yeah, it's horizontal, yes.
What?
Now, what she's saying, so we can, like in the exam, so now we have two lines, yes, we have recorded 50, 10, 20, 12. So what she's saying is, right, this line will not be there. Then we can write, now there is one whole row, one row. So you have space to write two things. Make sense? That's what I meant by merge. You merge in Excel, or even like, in the text box, you can merge horizontally. This one now, horizontally, yes. That's what you said, yes.
It wasn't that.
Then what?
No, it was that concept, but like the question was like, would you write the 76, like the 70 line, like the 76?
In the balance?
Yeah, the balance. Would you still write it like where you told us not to write it? Like, you know how you told us to keep the space?
Yeah, no, you can write like this. No, I know what you mean. Yeah, write basically towards the bottom. Yeah, right towards the bottom. Horizontal. Right. Okay, guys, then part E. Who can tell us the double entry? Yes, Chanara, can you tell us the double entry? Yeah, inventory write down.
Is it 170?
170? No. How much did we say inventory write down here?
Oh,
Here. Look at this.
yeah.
How much is inventory write down? 740, yes. 740. Inventory write down. 740. Then we debit it. Where do we credit? Inventory. 740. What's the date? October 31st. And then what's the narration? The memo is 73. Right. So what's the narration, guys? Inventory written down to NRV memo 73, yes. Okay, guys. That's it, yes. How do you find inventory write down?
No.
How do you find inventory write down? Bad?
No, not bad, but not good. It's in the middle. It's in the middle. Our cost was.
Let's find out how do you find inventory write down. Yes. Yes. Good. Sanina? Good. Yeah. Any else question? Good. Yeah. All right. Then question number, no, not question number 4, we can't do. Theory. Where? Any, something happened? Okay, guys, inventory turnover. What's inventory turnover? Don't know. You can't say don't know. We did like a couple of months ago, yes?
The average number of days it takes for inventory to be sold.
Yes. Right. Inventory turnover, guys, ITO refers to. Oh, sorry, ITO is an efficiency indicator. We gave another term for the efficiency indicator. So is it speed of liquidity, good memory? Anybody remembers the formula? Average inventory divided by net sales? No. Divided by, sorry? No. No, we can't compare net sales, guys. Why? Because inventory is at the cost price, net sales is at the selling price. We are not comparing apples with apples. Yes.
Inventory and costs.
Over COGS, yes. Cost of goods sold. Right? Times by? No, not 100, 365. So we are, what is the units of the inventory turnover, Punara? What is the units? Number of days. Okay, I think everyone knows how to calculate the average, yes? Opening inventory plus closing inventory divided by 3. 3 or 2? 2. Self? Yes, 2, okay? Average. Actually, it's not really necessarily average, it's the median value, yes, but I don't know whoever.
If you had opening, middle, and closing, and then divide by 2, that'd be
Yeah.
possible.
But the thing is, we don't get the middle one. I mean, we don't calculate the middle inventory because it's costly for the businesses to do in the middle of the period.
If you did interim before.
Interim, then you don't do the inventory count. You take it from the inventory card. Yeah. Inventory at the start of the period plus inventory at the end of period divided by 2. Okay. Now, my question, or any questions do you have? If the COGS wasn't given, what will you use? Cost of sales. Both haven't been given. Then you will be given the selling price for sales with the markup, then you can calculate backwards. Actually, I haven't seen any, not so far, in the BCO in SACS actually. If I did if I designed this, I would have gone it. But yeah, I haven't seen it. Right? So that's why I have given it. I haven't seen, but I'm imagining, like if both of them haven't been given, then of course, we're using the calculate backwards, the amount. How do we evaluate inventory turnover, guys? Yes, what are the benchmarks?
Previous budgeted,
What are the benchmarks? Marks on the bench? Yeah, no.
Standards.
Yeah, standards, yes, not marks on the bench, yes. Standards, right? So basically, high level of standards are the benchmarks. So how do we assess them? Right? If you read the textbook, it says like analyze. That's wrong. We are assessing actually. Analyzing is different. Analyzing is you go into details, right? But this one, we assess. We check if it is good or bad. So how do we compare guys? Previous periods, budgeted and industrial average. Then if the inventory turnover, right? If this period's inventory turnover is higher than the previous period, would it be faster or slower? Yes. Is my question clear? So let's say this period we calculated the inventory turnover, it says 30, right? Last year's one 25. So then this period's one is what? Slower or faster? Slow, yes, sir. Shall we do question 4? We don't have to do all of them. I'll just do part A. Still 6:45. The time. We have 15 minutes. I mean 45. Huh? 6:45. Really? Look at the graph.
The future food.
Can you?
Yeah.
Where is it?
We're talking about the water quality of the house.
What?
Have you seen the water? Like,
Water?
yeah, the drink, they don't have drinking water.
Yeah. But the tap water, that's the normal tap water, yes? No? You can't drink it? Huh? Hopefully it has a lot of, yeah, it has nutrition.
Yeah,
it-
it came out yellow color.
No, it is because it more nutrition.
Oh. 13 water.
Protein, yes. That's
It'd be great for you to in the water. It's not blind. So that's why.
I drank it cold.
yeah, my previous 3-4 they used to make tea and sometimes coffee. Yeah. I stated what is it? What is part A? How long it takes for the business to sell its inventory on average.
And then.
Did you get this value guys?
Well, you always find it in your school. Wait, this point, so you got 88.8 something basic. Does that mean, so like, if you like, what are we looking at?
Okay, I was saying, should it be 88 days? Cause like, you can't have like 0.8 per day.
Yeah. So then the question is if it is 88 or 89?
Yeah.
Then
What is it?
what is it? 88.8. What is it?
Yeah.
If you round it?
Or 89, in mathematics,
Yeah. 89. Normal rounding.
so it was like 88.2, then 88. But,
But this, if it's like 88.3, like at 88, you have.
Sorry, if it is 88.2,
Yeah, so, yeah, we just went around to 80.
You round it up to 83.
It was 89. When I said, wait, 80, wait.
No, he said 88.2.
89.
89. No,
Yes.
88.
It's nice.
Round, normal round.
It's really supposed to be that.
We did that, if you remember, we did that only in one place. We did round it forward. 88.2, 89, where? Nah.
We'll set it up.
In unit 1,
Oh, break even.
break even. Those on yeah, because it is otherwise, if you did 88 for 88.2, we are saying 88, then it's not necessarily break even. It's going to make a loss. So that's why we round it forward. But other than that, unit 3 for VCE always normal rounding.
But it's really has something like a place for. Back here.
Yes, girls, how did you go?
Codes.
What did you get? 71?
Yeah.
What did you get, son? Okay, you want me to do it? Okay, how do you get the average inventory? 71 is wrong. So inventory, average inventory, how much? Yeah, 70. So 68 plus 68,000 plus 78, yes, which is 73. Yeah. This one divided by 2, 73. Divided by COGS, yes, how much? 300,000. Times by 365 is equal to, you are getting 88.8, but you are rounding it to 89. 89. Okay, Punar? Did
Write the wrong number.
ah, okay. Okay, guys. Then thank you for coming today. Then we'll see you tomorrow.